Hey everybody, my name is Jake. Welcome to the channel. In today's video, I want to talk primarily about consumer staples, and I want to go into my own portfolio and share with everybody how my portfolio has been doing, and most in particular, the consumer staples in my portfolio. If you're new to the channel, I'd invite you to subscribe. I talk about dividend growth investing in every single video, and I kind of take it at a different twist in every single video. Every video is a little bit different, and in the last couple of months, if you follow the channel, I haven't really dove into my portfolio as much, but rather focused more on educational videos, talking about different pieces of investing in a dividend growth strategy. And in today's video, I want to focus the video on the portfolio and really kind of share with everybody what I've been doing. The market has been very volatile, and just kind of, share with everybody what's been going on and kind of show what the performance of the portfolio has been, right? And so in today's video, I'm not going to go into every single slice of my M1 Finance portfolio, right? In M1 Finance, you could break it down by slice, and I have my slices broken down by sector. And in today's video, I want to focus on the consumer staples sector. And before I do that, I just want to, I always try to make sure that when I create these videos, I keep in the back of my mind, really the demographic or who's viewing the video. And I know that about 60% of the viewers are here in North America. The rest are international. And I know that the majority of the viewers are between the ages of about 25 and 45. Now, I know that there's outliers in both directions, and so I kind of try to keep that into consideration when I create my videos. And so in today's video, it's not going to be any different, right? And so I just want to kind of catch everybody up. So if you're new to this is M1 Finance. It's an online free brokerage that you can invest with. It's really not ideal for buying and trading. I get asked all the time, almost every single day, really questions around, okay, well, when would it be better to use M1 Finance or another brokerage like Schwab, Fidelity, or Robinhood? And my clear-cut answer is, if you're looking to buy and sell at a specific price point, stay away from M1 Finance. Don't do it. You're going to get frustrated beyond belief. Don't do it, right? And I will be honest, when I first signed up with M1 Finance last year and I transferred my portfolio from Robinhood, I was really new to the platform and really frustrated when I tried to buy individual companies on specific days at certain prices. It does not work that way. So if you really are finicky around the actual price point that you're getting into stocks at any given time or day, stay away from M1 Finance. If you're looking to invest long-term and you want to set your portfolio on autopilot, essentially through weekly transfers, right? I have my account set up where it's on autopilot. I transfer a set amount every single week. And then what it does is, based off of the dynamic rebalancing according to my target allocation, M1 Finance automatically invests into my underweight holdings. So I don't have to manually go in and cause a taxable event and manually rebalance. M1 Finance does it for me. And it's really a hands-off portfolio or platform. So really, when I say stay away from it, if you want to buy and sell, I really mean it, because it can become very, very frustrating. But if you check it maybe once a week, once a month, or whatever, say you're just invested into a couple ETFs, this is a wonderful platform to just put it on autopilot and just kind of set it up and then forget it. Really, that's really the best thing that you can do. And in the dividends that you're getting, the thing that I love about M1 Finance, before I get into the consumer staple part of the video, what I absolutely love is the reinvestment of the dividends, the drip, right? It's not being invested into the company that paid the dividend. For example, Leggett & Platt, the $2.92 that I got here on April 15th, it didn't get reinvested into Leggett & Platt, but it got reinvested into my other holdings in my portfolio, right? So with my transfer of $50 on April 16th and the remaining dividends they got from the previous day, it bought the following shares in my portfolio. And that's what I love about M1 Finance, right? And so if you want to sign up with M1 Finance, I do have an affiliate link in the description below. You can sign up. Once again, if you want to buy and sell, stay away from it. But if you want to set your portfolio on autopilot, set it up, and then just kind of set it on autopilot, it's a great, wonderful platform, and I highly, highly recommend it. Okay, so consumer staples. Consumer staples are really your essential products really that every single person, regardless of what of economic times, you're absolutely going to need. For example, a consumer staple. Let's dive into here for just a second. The consumer staple examples that I have would be, for example, Coca-Cola, Kellogg's, Procter and Gamble. We're going to talk a little bit more about Procter and Gamble. This is a hot topic at the moment. Walmart, Pepsi, Kimberly-Clark, McCormick, right? These maybe store name brands that you see at Costco, Walmart, Target, etc. Companies or products that you're going to need in good economic times and bad economic times, right? One of the most popular brands out there during economic downturns is Clorox. You look back at 2008 and beyond, Clorox has been that tried and true company stock through good economic times and bad economic times. Okay, and so the reason why I want to focus on consumer staples in this video is there's a lot of turbulence in the market. There's a lot of people saying, okay, should I sell now? Should I buy now? And with consumer staples, in the spirit of what I just said with setting your portfolio on autopilot and feeling comfortable with investing on a weekly basis, and you don't feel like you're going to invest in something that's going to go bankrupt tomorrow. Consumer staples is a great sector to invest in, even, especially when the market is down. Now, unfortunately for us dividend investors that are trying to increase our yield on cost, the dividend based off of the price point that we're purchasing, because the stocks are going up. These are great recession-proof stocks that actually go up when the market is going down. Right? It's kind of interesting to think about that, but think about it, your discretionary stuff like your hotels, your movie theaters, your cruise lines, all that stuff that you spend your discretionary money on, those stocks usually get beaten up more in an economic downturn, for example, what we're seeing right now. But companies like Procter and Gamble, where they're selling home, essential items like toilet paper, body wash, whether it be Clorox, your Clorox wipes, right? These are essential items that every household is going to need in good economic times and bad economic times. Okay. And so this is what we're going to be talking about in today's video. And you can see, in my portfolio, not all consumer staples are created equal, right? You look at Walmart, Walmart is just crushing it right now. Whereas other companies like Cisco are getting beaten up pretty bad. Hershey's is still pretty down. And this is obviously relative to the price point that I purchased the stocks, right? Tyson Foods is down pretty bad, ADM. And this is one that's going to be really interesting. They're going to be releasing their earnings here this coming week. And now the interesting thing about what's going on right now is really nobody really cares about what happened last quarter. It's really all about the guidance of what's going to happen the remaining couple of quarters for the year in 2020 and beyond. So what's interesting is a lot of companies are just writing off 2020 as a whole and just saying, okay, all right, we all know that 2020 is going to be a rough year. Let's just start rebuilding and focusing on 2021. But these companies, these consumer staples, Pepsi, McCormick, Kimberly-Clark, Hormel Foods, right? These companies, if you're a new investor and you are a little bit more intimidated by getting into the stock market and buying actual individual stocks, this is a great way for you to start. If you're just starting out and you're thinking, okay, I want to dip into individual companies, I'm interested in ETFs, but I want to pick a few good stocks, this is a great place to start. And when I mean place, I'm really talking about consumer staples. Consumer staples are going to do incredibly well in 2020 and in the coming years. Okay, once we see that turnaround, and we enter a bull market again, and who knows when, that's when you're going to say, okay, well, let's look at technology, look at these other hyper growth sectors. But for right now, consumer staples are really a great sector if you're a new investor, especially looking for dividends and safe dividends. That's really the key thing, is your dividends are much safer in consumer staples, especially in 2020 and beyond, right, than other cyclical sectors, okay? Now, let's say, for example, you're a new investor and you want to invest in consumer staples, but you just don't want to invest the time, or you're just a little bit more risk averse with going with individual stocks. What you could do is you could take a look at looking at sector specific ETFs. And one of my favorite is through Vanguard. These are the Vanguard 11 sector ETFs, and I have it filtered here by performance year to date. The highest performing sector year to date has been healthcare, followed with technology. And then in third place here is consumer staples. So consumer staples, if you wanted to invest into the consumer staples sector alone and you wanted to leave everything else out, you can do that by investing into a sector-specific ETF, okay? And what you can do is if you're like, all right, well, that sounds interesting, but what do I actually get when I invest in, for example, VDC from Vanguard? You can head over to ETF.com and you can take a look and see, okay, what are you getting when you invest into the Vanguard Consumer Staples ETF? And you can see here the important information when it comes to this individual ETF. When was the inception date? You know, how long has it been around, right? The expense ratio, very, very important. What is the fee, or what is it going to cost you to invest into this ETF? For this type, it's very low considering its peers in this space. Assets under management, the size of the ETF, you know, how many assets do they have under management? You can see here the actual current dividend yield, very, very important. And the thing that I love about this ETF, especially the consumer staples, this ETF right here, I consider this much safer than other sector ETFs. This is, in my opinion, a safer dividend yield, and I believe that this is going to continue to grow. Okay, and the number of holdings, there's only 93 holdings in this ETF. And if you wanted to read through it, you can read through the fund description, like how do the fund managers at Vanguard, what is their methodology around choosing the companies, the holdings in this ETF. And then what you can do is you can go on, head on down here to the bottom, and you can take a look at the sectors within, you know, the micro sectors within the sector. So you have your diversified retail, you have your household goods, you have your food and tobacco, your personal household beverage, etc. You can see, okay, well, within this sector, how is it set up in the micro vertical? Okay, and so what you can do then from there is you can take a look at the top 10 weighted holdings. And this is really, really the cool stuff here. You can see that the top 10 weighted holdings make up 66% of this ETF. That's really actually high, but considering that there's only around 90 holdings in this ETF, it's okay. All right, so Procter & Gamble has the highest weighting in this ETF. Now, Procter & Gamble just recently increased their dividend, where you see dozens and dozens of other companies cut their dividend. You know, here in the beginning of April, you saw on April 1st, a ton of companies start cutting their dividend. Everybody thought it was an April Fool's, but no, it's actually real. All of these companies are cutting their dividends. And you're seeing other companies like Procter & Gamble, Costco, who are increasing their dividend even in 2020. And after all of this has started, right? There was a lot of companies that in January, beginning of February, that increased their dividend for the year. And yeah, that happened. And so you're also seeing other companies like Johnson & Johnson, Procter & Gamble, Costco, that are increasing their dividend here after everything that has been going on in the global economy here just most recently. So really interesting stuff. And so if you were to go with this ETF, these are the companies that you're going to get. You can click the view all here and you can see the other holdings within the ETF, and you can see how it kind of breaks down, and you're going to get lower exposure to these other companies, these smaller market cap companies, for example. Maybe a lot of companies that you may not know of, for example, but you're still getting exposure to them, but just very small amounts, right? So the highest allocated holdings in here, Procter & Gamble, Coca-Cola, Pepsi, all of these companies you're going to see in my portfolio. The majority of these right here you're seeing in my portfolio, and that's kind of how I have my portfolio broken up in as well, as right. I don't have it so weighted where I have it skewed into just a couple of holdings, like having 15%, 10%. I have it fairly evenly weighted in my portfolio. Okay. So those are a couple ways that you could get exposure to the consumer staples sector. Okay, if you wanted to do a little bit more research on these individual companies, let's say, all right, well, I want to pick my own individual companies. I don't want to go through an ETF, but I'm not really quite sure of, how to best do that. There's other videos that go into great depth around how to pick great dividend stocks or dividend companies. A resource that I really like is Seeking Alpha. Whenever I'm doing my research, this is really the first place that I go over to is seekingalpha.com. It really has all your essential information, right? You can see the current dividend yield. You can see the payout ratio, very, very important. This is what they're paying. The company is paying out to shareholders, their net income to shareholders in the form of a dividend. You can see the dividend growth rate, like how many years of consecutive dividend growth, right? And so this is what I'm doing when I'm investing into consumer staples. So hopping back over to the portfolio here, in my portfolio, I have 18 holdings, 18 consumer staples in my portfolio. And some of them that I'm really interested in or thinking that they're going to do really well. If I were to look into my crystal ball for 2020, I think the market has, for the most part, and this is what's kind of crazy about everything is all this uncertainty, but I believe the market has already baked in the results for the next coming quarters. They've already priced it in, or the market's already priced it in. So you see those companies that are really, really winning right now, for example, your Walmart, Kimberly-Clark, your McCormick, Procter & Gamble, Kellogg's, Hormel Foods, a lot of these companies are going to continue to do well. These are the winners and losers of my portfolio. I think 2020 is going to be defined by winners and losers. I think the winners are going to get stronger, the losers are going to get weaker, and I think we're going to see that trend here throughout 2020 and into 2021. But once again, I'm just a guy on YouTube. Who knows? I don't have a crystal ball. We could see a V-shaped recovery. We could see a U-like recovery. We could be at the beginning of a multi-year depression. No one really knows. Hope for the best, plan for the worst. That's what I've been saying the last couple of months here, and that's really what I live by. In my previous videos, I've shared that I tapped into my emergency fund to purchase on down days. I want to let everybody know that I work in a cyclical job market in my 9-to-5 job. I work in sales, and my recent commission check that I received for this last quarter, I put all of that commission check, that entire check, I put it back into my emergency fund. So I feel safe. I feel comfortable. I'm taking it a day at a time. I'd be curious to hear what you're doing. Are you investing heavier into consumer staples? How do you have your target allocation set up? In next week's video, I'm going to be sharing another review my pie video where I'm going to be reviewing subscriber portfolios here on the channel. I'm not a financial advisor, so it's just merely my opinion. I'm just a random dude here in Austin, Texas. But if you're interested in hearing my opinion on your portfolio, shoot me over a link to your portfolio to the email listed in the description below, and also give me a little bit of insight into who you are, your age, your goals. A goal could be like when you're looking to retire or tap into the dividends to pay for your living expenses, how much you're investing each month, right? Those kind of things. And you can also share if you'd like to remain anonymous, due to data privacy. I don't want to disclose any names or anything like that. But if you're interested in that, send me it over and I'll review in my next Review My Pie video. Thank you everybody so much for watching. If you're new to the channel, I'd invite you to subscribe, like the video, and I will catch everybody in the next video.